Hi, it's Mark Bernard here with the Bernard Institute for Cybersecurity. Today I'm here to talk about Risk Universe, the cybersecurity universe, and the risks that are inside of that universe. If you haven't checked out my website already, please check it out. I have lots of videos loaded there. You can also find us on YouTube or on Vimeo. And we have Twitter accounts as well as a LinkedIn business account and also on Facebook. So please check us out. And if you like our videos, make sure to click the little like button and to share our videos with other people. Okay? Thank you. So the risk universe, wow, this is a big topic. Okay? Here's the way that I look at the risk universe. And I like to combine a number of different risk management methodologies, take the best from each one and bring them together so that I get the best results for my customers. So I always start out with this. This here is the backbone of the risk universe. So we have a product or a service that we're trying to deliver that's part of the organization's mission, regardless of if you're in government or if you're in the commercial sector, there's something that you do that makes your organization special. That's what you do. So that product or service has a backbone. And connected to that backbone is a number of risks. So these risks all come from the enterprise risk management framework. And that's what makes them kind of special, is because they're well known by the executives and the board of directors. So one of the biggest challenges that we have in the cybersecurity profession, as you will find out if you don't already know, is how we communicate cybersecurity risks up to the board level to get their support and the executive support in order that we can address the risks within the organization. So this is my approach. This works. It's been proven many times. So there are 5 main risks within the enterprise risk management framework. One of those is financial risk. Another one is strategic risks. And just to back up a little bit, so financial risks are, and when you think strategic, so you're thinking 3 to 5 year business plans, you're thinking what are the goals for revenue or for maybe controlling costs within the organization or reducing costs. So there's some financial goals that you set, and there's risks associated with those financial goals. Okay, moving forward again. And then there's strategic risks. So financial risks, while they might be about generating revenue or controlling costs, strategic risks are more about how do we grow the business, or how do we change or transform the business into something better, continual improvement, right? Or how do we take up more market share if we're in the commercial business, right? How do we beat out our competitors and take over their market share? So strategic risks is one of the 5, along with financial risks. And then hazard risks. Now, hazard risks are what are the dangers to our employees, to the organization? What things do we need to take care of? So in some organizations that you work in, you'll find that they have safety committees. And safety committees are really geared around making sure employees are safe. So, and it depends on the environment, right? If you're in a manufacturing environment, you probably have more risks due to the heavy materials that you handle or the processes that you work through than someone who works in an office building in a bank, right? But they may still have some risks. So there could be things called disaster recovery plans, help to mitigate this risk, or business continuity plans. And generally, risk management also helps to mitigate hazard risks. And then we have something called compliance risks. So compliance risks are kind of interesting because this is something that obviously that management pays close attention to. You probably hear a lot about governance, risk, and compliance, GRC roles, employment opportunities out there. They deal a lot with the compliance risk. ISO 27001 does a really good job at creating a legal registry, which I've talked about in my other videos. If you've followed me and you follow my videos, you will see that. Remember to share my videos and like them. Compliance risk has to do with specific things like what are your regulatory obligations as an organization? What are your statutory obligations? So there are laws such as if you're incorporated, there's an incorporation law. There's also laws around employment. So there's laws around taxes, around the tax, income tax, and the corporate tax. So there are a lot of different laws around the organization. Regulations are like GDPR. So you have specific regulations that you have to follow in order to protect the privacy of the information of your employees and also of your customers, for example. Or PCI, where you have to protect payment transaction information because, again, it's tied to personal information. So you have to protect that. So there's lots and lots of compliance risks. Compliance risks get a lot of attention by senior management because often a compliance risk needs to be addressed because the last thing you want is to have a regulator come in and do audits of your organization or for you to be put on a list where you might be monitored for a long period of time. So you want to be a good corporate citizen, you want to do what needs to be done, and you're going to follow whatever the regulations are or the statutes are. There's also contractual obligations. So you have internal facing contractual obligations where you license products from other companies. So for instance, if you use Microsoft, you pay for Microsoft licenses or Oracle or what have you. So there's many different types of technology, I guess, that have intellectual property licenses that you have to respect. And part of that obligation to the organization is to make sure that you protect the intellectual property of those companies so that people can't copy them or reverse engineer them. So you need to protect those. There's also the external, which may be the most important to a lot of organizations, especially if you're in the compliance business, because external obligations are customer agreements or strategic partner agreements. So you provide services to an organization, maybe they're parts. If you're in the manufacturing business, maybe it's some type of financial service. Maybe it's hospital services, maybe it's dental. There's a host of different services. Maybe you produce chips for technology, maybe you manufacture technology. There's lots of different things, and this of course ties into the supply chain, and it's focused on in the NIST cybersecurity framework as well as the ISO 27000 framework. So supply chain, if you followed some of my videos, you would see that I talk about this in great detail, dematerialize supply chain and evaluate the risks of those supply chain partners in order to determine what the risks are, both upstream and downstream. So we're somewhere in the middle of that supply chain. So compliance risks are very important. We pay a lot of attention to those. And then, of course, we have operational risks. Now, this is the classic area where cybersecurity usually plays a big role. But to be honest with you, cybersecurity, because the more it becomes known what it does and what our function is as cybersecurity professionals, the more we expand into different areas. So operational risk, involves things like how do we make sure that the business information is available, right? So if we think about the principles of information security, how do we make sure information is available so we can conduct business? How do we make sure that the integrity of our processes is kept high so that the quality of our data and the quality of our services remains high? Because a lot of the things that we do does depend on information, and the quality of the information is very important, especially if you have to produce external reports for regulators or any of the statutory obligations. You have to maintain records for statutory obligations. So there's lots of catches around operational risk, little integration points within different areas. As I mentioned, cybersecurity risks, the more mature it becomes, the better known it becomes, the more cybersecurity risk affects all areas. So obviously, if you have adopted ISO 27001 or the NIST cybersecurity framework, you know that there's a legal registry that has to be created, and that has to be integrated into the operational risk process so that we manage operational risks and compliance risks on a daily basis, minute by minute, every day. Also hazard risks. If there are threats to employees, there are ways that technology can help to minimize those risks. And of course, anything that we do that helps to reduce the risk of the operations or compliance or hazard will have positive impact on financial risks and strategic risks. So if you follow my lessons and you've tuned into me or you follow me, you'll learn more about this as we move forward in this process. Okay. Now, the interesting part that I've adapted this process to is to what types of assets are required. Because really, in order to produce any of these services or products and the risks involved around them, there are assets involved. Now, what are those assets? Well, there are 6 main assets, okay? So number one, people. People are a big asset. Number 2, information, obviously. Number 3, software. Number 4, hardware. Number 5, telecommunications. And the telecommunication devices and appliances and technology are different than regular type hardware. Some people will say, well, they're the same. And I would say, no, they're not actually, because regular type hardware, like laptops, servers, tablets, etc., smartphones, we can store data on those. And of course, when you store data on it, then all of a sudden there's a whole bunch of new compliance concerns that you have to deal with around those. So there's different levels of control around regular types of hardware. However, telecommunications is different, because telecommunications is used to route and to control traffic flows of packets. Never stores any of these packets. We never store information other than configuration data on these devices. We're talking about things like firewalls, routers, load balancers, Wi-Fi hotspots. These things do not contain any information. They do not store information on them. So they're transitory data. That's the word that we use in the privacy business. So we call it transitory. So it is different. It has different types of threats and vulnerabilities. And number 6 is facilities. And those are the buildings or the offices that we work on. A lot of people are working from home these days. So number 6 could be your home office. Very important to understand the reason why I have 6 assets, 6 type of assets, is because each one, people, information, software, hardware, telecom, and facilities, each one has their own type of vulnerabilities and potentially could be exposed to different types of threats. So that when you do the risk assessment, if you want to do a quantitative risk assessment, which is what I recommend, and again, if you followed some of my videos, you will see that, you'll find out that quantitative is much better, because quantitative, we get to something called a risk rating, a calculated 100% risk rating, in order to help provide management with good intelligence around cybersecurity, so that they can make positive decisions that influence and reduce the risk exposure of the organization. Whereas qualitative is too fuzzy. It's based on opinions, it's based on experience, and experience is good. I mean, if you've had bad experiences, hopefully you've mitigated those and they won't reoccur, but it's nothing like a quantitative approach. So this is why we have 6. And of course, financial risks requires people, information, software, hardware, telecommunications, and facilities. So does strategic risk, hazard risk, compliance risk, and operational risk. And if we calculate the risks around these assets and the role that they play in each of these enterprise risk management areas, then we can roll it up and we can actually provide an overall score, which is kind of cool. So again, if you follow my videos and follow me, you'll learn more about how I do this, okay? So I can actually produce a risk rating for a particular service or a product. So imagine that. So if you work in an organization where you have many different types of products or services, and you know that there's cybersecurity threats and risks, well, the organization is probably taking a very broad approach to dealing with cybersecurity to begin with. However, the executives, I can tell you, would love it if you could be able to produce a risk rating for cybersecurity for a particular product or service. And this is really important, because one of the principles, or I guess a control gateway that you have to get through in order to do proper risk management, is you have to do valuation of assets. So some products or services may be more valuable to the organization than others. So it's important for us to take a really business-like approach, regardless of if you're in government or if you're in the commercial sector, in order to be able to quantify what the cybersecurity risk is for that product or service. And this will help your executive team and the board of directors make decisions around where they want to invest when it comes to cybersecurity in order to protect the overall organization. And your primary revenue streams need to be protected, where you might have secondary or third revenue streams that you're developing, or products that you're developing that are less important. So you want to, maybe you have a higher risk tolerance and you want to accept more risk around those areas. Okay, so, but if you can't quantify and produce that type of risk information for the executives, they won't be able to make decisions around that. So it's important to be able to quantify it. And of course, then there's the supply chain. So when you produce financial services, like let's say you have a finance department and they're managing the general ledger. Okay, so you have many accountants. They're all working on different accounts. Probably you have suspense accounts, you have AR, you have DR, you have a lot of different types of activities going around the financial group. But you may also farm out some of the work. So maybe you need to have some of the processes quantified. For instance, maybe you send some of your statements out to be processed, or maybe you have your payroll outsourced. So you require a supplier to provide that payroll services. But those suppliers also have the same type of risks that you have. So you have to be able to manage that supply chain relationship and the service continuity around those services. But before you can do that, you need to be able to quantify what the risk is and what your exposure is by using that service. So again, they have people, information, software, hardware, telecom, and facilities. And through this approach, through the approach that I take with risk management, I can be able to quantify. And this helps to build a good master services agreement and schedules around the protection of the information, especially if it's somebody who's providing services around personal information of employees or customers. So we need to be able to quantify that. And that's usually the biggest challenge for many organizations. A lot of organizations take kind of a blanket approach, but if you want to be very specific about how to handle the risks with suppliers or any outsourced services, you need to be able to quantify that. And if you follow my approach, you'll learn how to do that. So again, suppliers, there's suppliers for financial services. There's suppliers to deal with compliance issues. So maybe you have hired a contractor to help you become PCI certified, or maybe SOC 2, or some type of services. Well, that contractor has services and they have risks around those assets that they use to produce those services. So you need to be able to quantify that in some way. The same with operational risks. You have suppliers that provide services. Maybe you've outsourced some of your cloud, your data center to the cloud. So from the platform down, you have a service provider, but from the operating system up, you have applications and databases. That's yours. So you're sharing some of that risk. So the question is, you can never outsource all of your risk. Just because you have a supplier doesn't mean that you've transferred your risk 100% to somebody, because believe me, I've been in many organizations where if they have an issue with the data that's being handled by a third party, it always comes back to that organization. Whether you're in government or whether you're in the commercial sector, there's no way to avoid that responsibility. So you want to be able to manage that risk effectively. And I can show you how to do that. We talk about that when we talk about supply chain management or about outsourcing risks. So if you follow my threads and my presentations, you'll learn more about that, or you can sign up for a program on my website. This is the risk universe. All of these wonderful risks, all of these ERM mapped down to the operational cybersecurity level. And there you go. So I hope that you found this useful and informative. And if you have any questions, make sure to drop me a line, send me some comments. Make sure you share and like my videos so that we can spread the word about the risk universe and about the cyber risks that are involved in the cyber universe. Because this is important information, and this is a really good approach for people who don't have an approach yet, or maybe the approach that you have is not working. Okay, so thanks for now, and here are the assets listed below. You can see in my slide deck. Cybersecurity knows no bounds. It's true. Again, people, information, software, hardware, telecommunications, and facilities. Okay, you can find us on LinkedIn, Facebook, YouTube, Twitter, and you can also go to our website at www.bernard-institute.com. You can email me or call me. I'm available to help people. I have extra cycles, and my team is large. I have a lot of good professionals working with me who would love to come and help you and help your organization. Thank you and have a great day. And remember to like and share, okay? Thank you.